What if the government has already written you a detailed roadmap to building massive wealth, hidden it inside the one document most people fear and never read, and been quietly waiting for you to use it? Every year, millions of intelligent, hardworking people hand over a devastating portion of everything they earn, not because the law requires it, but because they never understood what the law actually says. Tom Wheelwright, CPA and CEO of Wealthability, spent decades inside the tax code at its deepest levels, and what he found changed everything he believed about money. Wheelwright is not a loophole hunter. He is not selling offshore schemes or gray area strategies. He is Robert Kiyosaki's personal tax advisor, a keynote speaker at Rich Dad conferences across 6 continents, and a man who has dedicated his career to one radical idea. The tax law in every country is, at its core, a series of incentives for business owners and investors. That sentence sounds too simple to be transformational. Stay with it, because by the time we reach the final sections, 2 specific things will land in a way most people never expect. The first is the roadmap itself. The second is why so few people ever use it, even though it has always been public. In this breakdown of tax-free wealth, you will walk away with the exact strategic framework Wheelwright uses to help entrepreneurs and investors permanently lower their taxes, not once, not this year, but for the rest of their financial lives. The Book Vault releases breakdowns like this one because we believe the right intelligence creates a real, compounding, unfair advantage. If this kind of knowledge belongs in your arsenal, subscribe right now and hit the like button because we are just getting started. The tax code is a government roadmap, not a punishment. We begin the investigation with the chapter Tom Wheelwright titles, "The Tax Code is a Government Roadmap, Not a Punishment," and it dismantles the most dangerous misconception in personal finance at its foundation. He argues that the tax code was never designed as a punishment, it was designed as a communication. Governments, he explains, use tax law the way a strategic investor uses capital to direct human behavior toward the economic outcomes the country needs most. When you understand that framing, the entire game changes instantly. The government needs entrepreneurs to create jobs. It needs investors to build housing. It needs innovation, energy infrastructure, food production, and local business development. And it is willing to pay for all of it, not with a grant or a check, but with permanent legal reductions in your tax liability. In a verified keynote at Rich Dad conferences, Wheelwright stated plainly that the tax laws in every country are first and foremost a series of incentives for business owners and investors. Most people never hear that sentence. They are still operating as if the tax code is a wall rather than a door. Here is where most people destroy their financial future without ever realizing it. They focus entirely on earning more salary, more commissions, more hours, and every time their income rises, so does their tax burden, because they are still playing inside the rules designed for employees. The Vault perspective on this is different. Wheelwright's argument is not that you earn less. It is that you earn strategically inside the categories the government actually rewards, and you stop volunteering your money to an ignorance tax you were never legally required to pay. Think about that for a moment. You wake up every morning, work hard, build skills, take risks, and then at the end of the year, you hand over a significant share to a partner you never chose in a deal you never negotiated. And that is the key word, negotiated. Because Wheelwright's entire methodology is built on the idea that your tax bill is not fixed. It is flexible, responsive, and permanently reducible if you play the game with intelligence. But this is only the first layer of the investigation. What comes next reveals exactly which players the government rewards most and why almost everyone you know is standing in the wrong line. And what I'm about to share with you now is the part of this book that most people never even reach, the 4 types of income and why most people choose the wrong one. We move now into the chapter titled, "The 4 Types of Income and Why Most People Choose the Wrong One," and it gives the entire Wheelwright system its structural engine. Wheelwright uses a framework adapted from Robert Kiyosaki's cash flow quadrant, dividing all income earners into 4 categories: employee, self-employed, business owner, and investor. He is unambiguous about what this means from a tax perspective. Employees and the self-employed consistently face the highest tax rates. Business owners and investors consistently access the lowest ones. The difference is not effort. The difference is category. And what I am about to tell you is the part of this book that most people never even reach. The self-employed are often in the worst tax position of anyone. They have left employment believing they are now free. But because they work alone, without employees, and without a legitimate business structure, They pay self-employment tax on top of income tax. They traded one cage for a smaller one with a different lock. Wheelwright is precise about this. The tax code does not reward hustle in isolation. It rewards production through systems, through hiring, through investing in assets that serve the larger economy. Late at night, when you put the spreadsheets away, a quiet question sometimes surfaces, doesn't it? You ask yourself whether you are actually building something or just running faster on the same treadmill with a different label on it. That question matters because the transition from the high tax categories to the low tax categories is not a matter of income level. It is a matter of structural decision-making. Wheelwright makes clear that the move to business ownership or strategic investment is available to almost anyone willing to change how they participate in the economy. Most summaries skip this entirely, but Wheelwright also addresses the psychological barrier inside this chapter. Most people believe changing their income category requires becoming someone different, taking on enormous risk, or starting over from zero. Wheelwright dismantles this. The shift begins with a decision about how your income is structured, not how much of it there is. A single legitimate business, even a side operation, immediately opens access to a completely different section of the tax code, one that was designed to make you richer if you are willing to produce rather than simply consume. And that shifts the entire weight of the argument onto what you do with a business once you have one. Business ownership as the master tax strategy. The investigation now reaches what Wheelwright identifies as the single most powerful legal tax reduction tool available to ordinary people. And it is not a specific deduction or a fancy structure. It is the act of owning and operating a legitimate business. The chapter he calls Business Ownership as the Master Tax Strategy is where the strategic depth of this book fully reveals itself. Wheelwright argues that almost every expense a business owner incurs in pursuit of income can be structured as a deductible business expense. Travel, education, home office, vehicles, technology, professional development, meals with clients, all of it potentially becomes part of your tax strategy rather than a drain on your personal budget. This is where mainstream advice collapses. Most financial advisors will tell you to save more, spend less, and invest in index funds. Wheelwright's framework exposes the fatal flaw in that advice. It ignores the tax dimension entirely. If you are in a high-income tax bracket and you save aggressively but pay full tax on every dollar before saving it, you are building wealth with a significant handicap that could have been legally eliminated. The business owner, by contrast, can invest pre-tax dollars, deduct legitimate operating costs, and keep more of every dollar earned before the government takes its share. Wheelwright's approach to business structure is equally precise. He discusses how the choice of entity, whether an LLC, S corporation, or C corporation, has enormous consequences for long-term tax liability. These decisions are not one-size-fits-all. They depend on how income flows, how many employees exist, and what the long-term exit strategy looks like. The message is not to rush blindly into one structure, but to make the choice proactively with a qualified tax advisor rather than by default. A bad structure chosen through ignorance can cost more than the tax savings it was meant to create. There is one thing Wheelwright emphasizes above all others in this section, and it resets every assumption you may carry about tax strategy. He insists that great tax planning is not reactive. It does not happen in April when you hand documents to an accountant. It happens at the beginning of the year, woven into every financial decision you make. He calls this proactive planning, and it is the single behavioral difference he observes most consistently between those who pay enormous taxes and those who legally pay almost none. The business owner who thinks about taxes every day is playing a fundamentally different game than the one who thinks about them once a year. But here is the truth that most people never face. Even the smartest business structure is useless if you never learn the one asset class the government rewards more than any other. And what comes next is where the game permanently shifts. Real estate as the ultimate tax shelter. Now we arrive at the chapter that Wheelwright describes as the most extraordinary legal tax advantage available in virtually every country on earth. And he titles it Real Estate as the Ultimate Tax Shelter. It centers on a single word, depreciation. Real estate, unlike almost any other investment, allows you to earn income while simultaneously claiming a paper loss against your taxes. The government has decided that buildings wear down over time, and it allows investors to deduct that theoretical wear down every single year against their taxable income. This means a rental property generating positive cash flow can simultaneously produce a tax deduction that offsets other income entirely. Inside the vault, we call this the paper loss paradox. You are making money and losing money on paper at the exact same time. For the uninitiated, this sounds impossible. For the tax-educated investor, it is the foundation of a long-term wealth-building strategy that runs quietly in the background year after year. Wheelwright also highlights the power of the Section 1031 exchange, a provision in the U.S. tax code that allows an investor to sell a property and roll the entire gain into a new property without triggering capital gains tax. Executed correctly over a lifetime, this provision allows an investor to keep compounding their real estate wealth without ever surrendering a portion to taxes at each transaction. The deeper layer most readers miss is what Wheelwright calls the step-up in basis at death. When a real estate investor passes assets to heirs, the tax basis of those assets resets to the current market value. This means the decades of deferred capital gains effectively disappear at the moment of inheritance. Heirs can sell assets that have appreciated for generations without owing tax on any of the historical growth. The strategy does not just build wealth for one lifetime, it transfers that wealth to the next generation with a tax efficiency that no conventional savings account or stock portfolio can match. At this point, the picture feels complete. Depreciation, 1031 exchanges, step up in basis. These are the tools that make real estate the ultimate tax shelter. But just when it seems like the full strategy has been delivered, Wheelwright adds a dimension that changes everything. The real power of real estate is not in any single strategy, but in combining depreciation, interest deductions, 1031 exchanges, and entity structuring into a coordinated, permanent tax reduction plan that functions as a complete financial architecture, one that does not just minimize taxes this year, one that eliminates them systematically, permanently, and legally, year after year after year. What comes next is where everything you have heard so far finally connects into something you can actually use. Building your permanent tax-free wealth plan. We now enter the final intelligence briefing in this investigation, the chapter Wheelwright calls Building Your Permanent Tax-Free Wealth Plan. This is where he moves from individual strategies to the complete personal tax architecture. And this is where the book's deepest argument finally lands. Wheelwright is adamant that tax reduction is not a product you buy. It is not a one-time filing trick. It is a living, evolving strategy that requires a specific kind of advisor, consistent documentation habits, and an annual mindset that treats your tax position the way a CEO treats a balance sheet. The right tax advisor, he argues, is not the person who files your return. It is the person who redesigns your financial architecture around the legal incentives already waiting to be used. Wheelwright describes the difference between average taxpayers and what he calls super taxpayers with sharp clarity. Average taxpayers are passive. They earn income, hand it to an accountant in the spring, and accept whatever number comes back as inevitable. Super taxpayers are active participants in their own financial outcome. They understand the rules. They document everything. They structure their business activities deliberately. They choose their advisors based on strategic alignment rather than convenience. And they approach tax planning the way a chess player approaches the board, always thinking several moves ahead rather than reacting to whatever is currently on the table. The voice anchor carries this message with full force because Wheelwright does not soften his conclusion. He states with the precision of a seasoned strategist that the gap between what the wealthy pay in taxes and what the average worker pays is not a product of unfairness inside the system. It is a product of education. The wealthy did not buy access to a secret code. They learned to read the code that was always public, always legal, and always available. Robert Kiyosaki himself has said that Tom Wheelwright is the team player anyone who wants to be rich needs to add to their team. And the reason is not magic. It is documented, executable, repeatable strategy that anyone with a legitimate business or investment can begin using immediately. And now, remember the question we opened with, the one about the roadmap already written for you. This is the answer. The tax code is that roadmap. The government has been broadcasting its priorities for decades through the incentives it encodes in the law. Energy production, job creation, housing development, innovation investment. If your financial activities align with those priorities, the government will reward you with permanent tax reductions. The wealth is not hidden. The strategy is not secret. The only missing ingredient for most people has always been the education to see it. Key lessons and insights. The tax code rewards producers, not employees. The first lesson this book drives home with absolute precision, and the one that reshapes every assumption about the financial system, is that the tax code is not neutral. It takes sides. Wheelwright's core argument, reinforced throughout every chapter of this book, is that governments use tax law to incentivize the behaviors they need most from their citizens: job creation, housing supply, energy production, and investment in infrastructure all receive preferential tax treatment. And the citizens who do those things, business owners and investors, receive the financial reward. The practical application here is immediate. If you currently earn all of your income as an employee or sole practitioner, you are operating inside the highest tax section of the code with the fewest available deductions. The action is not to quit your job impulsively, but to begin building a legitimate business activity alongside your existing income. Even a small structured business opens access to deductions, NT benefits, and strategic planning that can permanently alter your annual tax liability. The first move is structural, not financial. Proactive planning creates permanent results. The second lesson surfaces across every chapter and is perhaps the most behavioral insight in the entire book, and it is this: tax strategy does not live in April. Wheelwright draws a hard line between reactive tax filing, which almost everyone does, and proactive tax planning, which the wealthy have always done. Reactive filing accepts whatever tax liability has accumulated throughout the year. Proactive planning actively structures financial decisions throughout the year to minimize that liability before it ever crystallizes. The difference in outcome between these two approaches is not marginal. It is structural and compounding. Every business expense documented correctly, every entity decision made deliberately, every investment timed with tax consequence in mind creates a cascading reduction in what you owe. The practical application is to work with your tax advisor not once a year at the deadline, but quarterly, strategically, and proactively. Think of it as managing a portfolio where the returns are measured in dollars permanently kept rather than dollars provisionally earned. Real estate depreciation is a legal superpower. The third lesson that most readers of tax-free wealth carry with them long after the final page is the depreciation principle, and the reason it lodges so deeply is that it violates intuition. Wheelwright reveals that real estate allows an investor to collect cash income while simultaneously reporting a paper loss to the government because depreciation is a non-cash deduction. You do not spend money to claim it. The building simply exists. The tax code acknowledges its theoretical wear, and you receive a deduction against your taxable income in return. The application is direct. For anyone already invested in real estate or considering it, the strategy is not just to buy property, but to buy it inside the right entity structure. Document all associated expenses meticulously and work with an advisor who understands cost segregation, bonus depreciation, and 1031 exchanges. Wheelwright's point is not that everyone must become a real estate investor. It is that for those who choose to, real estate offers more legal tax advantages stacked on top of each other than almost any other asset class in existence. Your business is a tax strategy engine. The fourth lesson reframes how you think about business ownership permanently. Wheelwright argues that owning a legitimate business is not just an income strategy, it is a tax strategy. The business structure you choose, the expenses you document, the people you hire, and the way your income flows through your entity are all tax decisions dressed in business clothing. Every legitimate operating cost of a business is potentially deductible. Education, travel, professional services, equipment, and home office expenses can all reduce your taxable income when structured and documented correctly. The practical takeaway here cuts deep. If you own a business and treat it only as a vehicle for revenue rather than also as a vehicle for strategic tax reduction, you are leaving enormous value behind every single year. Wheelwright's prescription is to involve your tax advisor not at the filing stage, but at the decision-making stage. Before you make a major financial move inside your business, ask what the tax consequence is. Before you hire, buy, invest, or structure, ask whether there is a more advantageous way to do the exact same thing. This habit alone, practiced consistently, can change your financial trajectory in ways that compound over decades. The right advisor changes everything. The fifth and final lesson from Tax-Free Wealth is the one that resolves the second question planted at the very beginning of this masterclass, the one about why so few people ever use the strategies that are openly available to everyone. Wheelwright's answer is unambiguous. Most people have the wrong kind of tax professional. They have a tax preparer, not a tax strategist. A tax preparer documents what happened. A tax strategist designs what will happen. And the difference between those two orientations is worth, across a lifetime of earning, a staggering amount of wealth that either goes to taxes or stays in your hands. If you leave with nothing else from this video, let it be this: the quality of your financial future is directly connected to the quality of the advisor you allow into your financial strategy. Wheelwright is specific about what to look for. You want someone who is proactive, who reaches out to you before deadlines rather than after, who understands your specific business and investment activities, and whose primary goal is reducing your tax liability permanently, not managing your filing efficiently. The advisor who changes your trajectory will cost more than the average accountant, and they will make that cost irrelevant within the first year. The Vault Closing. Tax-Free Wealth is not a book about taxes. It is a book about freedom. Tom Wheelwright spent his career watching intelligent, ambitious people hand over a fortune to a system they never understood, and he wrote this book as a field guide for everyone who is done accepting that outcome. The deepest message here is not about deductions or entities or depreciation schedules. It is about the radical, empowering truth that the rules of wealth building have been written into law, made publicly available, and patiently ignored by the majority of people who could benefit most from them. Here is your 7-day action. Within the next week, identify whether your primary income falls into the employee, self-employed, business owner, or investor category, as Wheelwright defines it. Then identify one specific action you can take to begin shifting your financial activity toward the business owner or investor side of the equation. It does not have to be enormous. It can be registering a side business, speaking to a tax strategist rather than just a tax preparer, or documenting a legitimate business expense you have been paying out of pocket without recording. One structural move, made deliberately, is the beginning of a completely different financial life. And that brings us full circle to where we started. The roadmap was always there. The government wrote it. The wealthy read it. And the gap between where you are and where you want to be has always had far more to do with financial education than with income level or opportunity. The Book Vault exists for exactly this reason. If this masterclass delivered real value, like this video, subscribe to the channel and drop your biggest takeaway in the comments below. Tell us which strategy hit hardest, because this community is not here to stay average. It is here to build something that lasts.